FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, let's go ahead and take a look at the daily market maker setups that we had today. And then also a very interesting thing that happened that I was actually able to capture for you guys is the manipulation that actually happens on a chart, on a live chart. All right, so I was able to capture that for you because I found it very interesting. I knew it was going to happen, but I didn't expect it to be this dramatic. So yeah, let's go ahead and let's get this started, guys. All right, guys, so the first setup here was on Euro JPY, and this was basically during the New York session. All right, essentially we got a move here, a type 1 move here, starting almost right from the bottom of the beginning of the New York session. Now, a couple things I want you guys to notice here is notice what happened basically during the London session. Basically a whole bunch of nothing, right? A lot of just movement sideways, sideways, sideways. Now, if you ever thought about possibly, let's say, getting into a trade, let's say maybe this, a trade like this here maybe, that you were thinking this was a W going back up, well, what's wrong with that particular pattern there? You have a W, yes, but what are you missing? You're essentially missing really the timing aspect, because this is happening really at the edge of the box here. And then number two is you didn't have a crossover above the 5 and 13. So that's two things against you. So that can't be a possible trade setup. So the biggest thing that you're going to run into as traders is really patience, and patience for waiting for your setup to actually appear. A lot of times what happens is, you know, as retail traders, you get very impatient because you're just sitting there waiting for something to happen. And so you think you're basically wasting your time, right? Because you're just sitting there waiting for something to happen and nothing happens. So you force yourself to make something happen because essentially you're just bored. But if you realize that if you're waiting for a very specific setup to appear and happen, and you have the actual patience to wait it out, you know, the setup will show itself for you. You just got to have the patience. So this particular setup here was basically on that entry there, and then you essentially had about 3 candles later this nice spike all the way up to almost the top of the range there, and then really this is all news induced. So all this was actually, this whole move here was actually news induced. You ended up getting it was about 50 pips up, and then somebody actually traded it back down. One of our traders traded it back down and got another 30 pips out of it, I believe, if I'm not mistaken. But yeah, so this was the first trade here, type 1 setup going up, and it was really helped out tremendously by the actual news event. That actually triggered a lot of stuff to happen at 10 o'clock. So we're going to get into those other ones here in a second, but essentially this is the trade that appeared that some of our traders took. Okay, you can see on the TDI basically we almost have a W here bouncing off of the what is that, the 30, 36, 37 line here. You can see first leg here, second leg down here, which is right here on the chart. So that's the setup there on this particular trade. Got a lot of help from news, definitely. So I don't know if it would have made that move if news didn't hit that at that particular time. All right. So the second trade that we got was Euro CAD, and essentially it's like a very similar move, and it's the same thing. Look, the same thing. You had basically price moving straight sideways, doing absolutely nothing. Okay, absolutely nothing, straight sideways. So you're not going to get a setup when this is doing this behavior. Okay, all they're doing here is enticing traders to go in, going short, going long, going short, going long, the whole session. Okay, if you ever see this kind of behavior, essentially your setup that you're looking for is should be expected to happen during the New York session. And sure enough, we ended up getting that. We ended up getting a spike to the 200, and then a reverse trade back up here. So the entry was right here after this candle had closed. Now, lucky enough, if you put these two candles, this one here and this one here, if you put them actually stacked on top of each other, you actually get a railroad track, if you look, because they're almost perfectly the same size. So if you put them stacked on top of each other, essentially you get a railroad track. So that was a trade setup. So your entry was after this candle, since this was above the close of 13, and then your stop loss essentially could have been used here, or it could have been down here. Ideally, though, with this kind of a pip range on Euro CAD, the stop loss would have needed to be here, because this is way too much of a risk. However, if you're going to put your stop loss down here, essentially what you have to do to minimize the risk is lower your lot size. So if you normally trade, let's say, a standard lot size, for example, on any trade, on any given trade, let's say, so if you're taking more risk on the stop loss like this, then essentially what you could do is you can do half. So let's say 0.50 instead of a standard lot, and that way you're reducing your risk but able to still take the trade. Okay, so this trade here planned out very beautifully as well, well over 100 pips on this particular pair. The next pair that we had was, we actually had a loss. One of our traders early in the morning took this particular trade here on GU, and we bring this up here. So he took an entry here after this candle, thinking that this was a type 2 setup, pinning to the 200. Okay, and he ended up getting stopped out here. I don't know if it was a break even. I think it was a 10 pip loss on this trade. But he took it as a type 2 going down and ended up getting stopped out. Barely missed the take profit and ended up coming right back up. So got stopped out on that trade and lost 10 pips. Now, ideally, though, what happened is during the US session, you actually got an opportunity to take a trade back up, which was this one here. So this trade going back up here produced 30 pips, depending on where exactly your entry was. But this particular trade basically was bouncing off of the middle of the range here. So it was a type 3. And you can see that this actually tripped up some traders also during London, where they thought that this was the second leg here coming down. And by all means, at that particular time, I mean, you know, you could definitely say that. The only thing really that would obscure you from actually taking a trade like this, and the trade that I'm talking about is, let's say, this one here, like this. So like a type 2 setup, and when you have both legs pinning to the 200 EMA, is basically if you know where you are in the cycle. Right, if you take a look, like, how far have we been dropping? Like, how many days? We've been dropping for 1, 2, 3, 4 days of drop. And so what do you see? The EMAs are all spread out. The 50, 200, and 800 are all spread out. And then you can see basically like a transition happening here, where this becomes level 3 formation here, and then it starts to work its way up. So this is basically working its way up, and you'll see the EMAs basically start to cross over like this. So depending on how far up it goes, but knowing that particular type of cycle, that you're in the third level of the cycle, or you've been going down, let's say for 4 days straight, I mean, and you see the 200 EMA is right here, you know, obviously you're thinking about possibly taking this back down to maybe yesterday's low to retest this low again, or possibly previous week's low as well down here. But the biggest deterrent is if you get into this trade here, you'll be looking at what happens when you get to the middle of the range, you know. And you can see basically it got rejected, went right back up to the 200. And then for that hour, it just literally got stuck there again in the middle of the range. And then boom, right here you finally had we take the type 3 setup. Now essentially on this one here, on this particular trade, we're really looking forward to seeing essentially if we can go ahead and get that full transition now, and basically try to maybe make a run, maybe a false move to the bottom, and then spike up and go up to maybe the 800 or so, and see if we can hit that range, hit that area there, and make that full transition happen for us. But those were a couple trades that were losses on pound USD, and one that was actually a winner during the New York session. Pound NZD gave us a very similar move as the other ones, where basically it was moving sideways throughout the entire London session. And so again, I can't, you know, harp on it enough, where if you get this type of behavior here, where you're just basically stuck between the middle and the top of the range like this, and you're just moving sideways, this is essentially behavior of them, you know, inducing traders to take a trade and trapping them, so then during the US session the actual move can be made. And you see what happened here. They finally got to the US box, went up, pinned to the 50, and then also got pinned to the middle of the range there, and then literally just dropped, as you can see. Okay, you can see also, notice how the EMAs, the 800 is here, the 200 is above. It's just basically pushing price down, right? You can see you have peak formation up here at the very top. So you're just coming down one level, creating, and then hopefully today, or this morning I should say, we could start to see about any possible continued drops. All right, the last one was gold, and gold was a very nice trade this morning. Most of it had to do really with, again, the news. The Fed's cutting rates made this especially move very powerful. So I ended up taking this basically on the 4-hour chart, and essentially what I was looking for is a break. You can see here for the last 12 hours we've been basically trading in this tiny little box here of a range. So essentially I was waiting for a candle to break past this little box here so we can get that move up. And really I was expecting only to go up to this previous range, which we had marked off based off of the 12-hour mark. So off of these lows here from these previous candles here was our original target. But when that news hit, I mean, it just skyrocketed up, and it just kept going. So we kept just moving the stop loss up. And then it finally got stopped out here on this candle. 1635 is when it got stopped out over here. But still very good trade, and it produced some really nice pips on this gold trade. So I know a couple traders took gold today, which is awesome. So that was the gold trade today that we took. All right. Very simple. Again, we were working off of what we were given off of the 12-hour chart, which the original plan was to make it all the way to the 50, which we did. And then it basically just hung around here. And then we went down to the 4-hour time frame. And I was looking for price to break out of this little box that has been stuck in for the last 12 hours. And then as soon as it did, we knew we could possibly make it up to this next level up. That was our goal. We ended up getting a little bit more than what we wanted, which is also always good. And that was it. That was really that simple on that gold trade. Okay. Now, I want to talk about Euro NZD because I was actually able to capture the manipulation that happens in the market. Okay, so what I'm going to do is I'm going to replay the chart. Now I have this on my I took this, recorded this on my phone, so it's on a small screen. But really, I want you guys to pay attention to the actual movement of price, of what happens when market makers are in there doing what they do best. Okay, and I want you to pay attention to the amount of fake out that they make, and then also how they work the spread. The spread is huge. Okay, so check out the two lines. So the red and the red and the white lines that are moving further apart or closer together, that's the actual spread being adjusted in real time. Okay, so let me play that clip for you now so you can see the actual manipulation, and then we'll come back. Alright guys, so that little move that you saw there was basically this candle here. This candle here. Flickering back and forth, back and forth, back and forth. So you can see like how they literally get traders, get breakout traders that are trading breakouts all the way down here, and get breakout traders that are trading all the way up here. It's unbelievable how they actually move. The spread is huge as well, because you can see how they adjust the spread instantly, second by second by second by second, whether they need to make it bigger, make it smaller, make it bigger, make it smaller. So very cool little demonstration there of how the market makers go ahead and mess with the spread, and also basically get traders to come into the markets going back and forth like that. Okay, so guys, I hope that you enjoyed this day's video. I hope that it brought you some value. Again, if you like seeing this kind of content, guys, please share the video, give it a thumbs up, give it a like, so I know that you continue to like this content. If you have questions, guys, for our Sunday Q&A, video that'll come out, please comment below in the description your question, so I could make sure that we get it answered for you. And then again, if you need any more help, guys, we do have an upcoming mentoring class that starts on March 30th. All right, guys, thank you so much, and we will see you tomorrow.